Hey guys, welcome back to the channel. If you're new around here, welcome. On this channel, I am documenting my family's journey to financial independence and generational wealth, and we plan on achieving that through investing in the stock market, real estate, cryptocurrency, and overall increasing our net worth. So if that sounds interesting to you, or you just want some motivation so that you can get started on your own personal wealth building journey, then subscribe to the channel, like the video, and join us. And if you are a returning subscriber, thank you guys so much for being here. I really do appreciate it. So in today's video, I have a good one for you. I'm going to be talking about the 5 best stocks for beginner investors. And before I get into the video, just disclaimer, I am not a financial advisor. I am not a fiduciary. I am just a small girl on her part of YouTube who love talking and researching stocks, who love learning about investing, who likes to find different ways to create passive income for her and her family so that we can achieve financial freedom. So let's get into the video because I got some good stuff in here for you guys. First, before we get into stocks, let's talk a little bit about what investing is. I'll link the video to my Investing 101 quick reference guide in the eye in the sky. There's some really good stuff in that video because you really should have an understanding of what investing is. And I do talk about some basic foundational principles to investing that every person should know. Whether you don't want to, get too much in it, you should have some basic idea of what investing is. And that video really gets into that detail. Also, you want to understand what fear is, because fear will prevent people from either investing at all, or when they do, for example, transfer the money to their account, they won't actually put it in the stock market because of fear. And again, fear is not something you want driving you in any of your choices. Trust me, I've been down that hole. It is not someplace where you want to be. Also, never blindly follow anyone. That's including me. You always want to do your own due diligence. You want to do your own research so that you can feel confident about the stocks that you put your own hard-earned money into. And always remember, I always preach this, continue to educate yourself, be flexible, that's very important, and just be consistent. If you do those things, I think you will have a great future in investing. Now, let's talk about your plan and your goals, because before you buy a single stock, whether it's individual stocks or index funds or even mutual funds, you should have a plan. What is your why? You need to come up with why you are investing in the first place, and then your end goal. So for example, one of me and my husband's whys is to create generational wealth. That is one of our whys. Now the end goal would be to leave our children with a better start than what we had. That's the end goal. So now that we have our why and our end goal, we need to come up with the in-between stuff. How are we going to get from this idea of generational wealth to actually achieving it? And that's why we have like different things going on. So some of our in-betweens are investing in different types of investments. So we have a dividend account with Robinhood where we focus strictly on dividends. We have cryptocurrency that we're investing in. We have rental properties that we're investing in. We have long-term stocks that we're investing in. We also have our 401k. We have an HSA that we're investing in. We also just opened up a Roth. Stay tuned for a video coming up about that. But those are all of our in-betweens. All of that stuff is going to get us to our end goal, and you need to come up with your own so that you can get started. And remember, take your time with this and be very specific and be intentional. You need to get really into the nitty-gritty and figure out your whys, your end goals, and your in-between. That's really important, guys. Now let's talk about what you should remember. When you buy stocks, you can buy stocks different ways. You don't have to just buy them one way. You can buy a whole share or several whole shares. You can also buy half a shares, quarter of a shares, eighth of a shares. You can buy fractional shares of any kind with stocks. And also, you can also dollar cost average. That's what DCA stands for. You can put the same amount of money into a stock each month, each pay period, and buy stocks that way. There are so many ways you can buy stocks nowadays. Now, let's talk about if you're not ready to invest in individual stocks, which is fine. You can do index funds instead. Now, just a quick reminder, index funds are just a collection of stocks or bonds that track a certain market index. So a certain market index is the S&P 500. I think everybody has heard of the S&P 500 or the Russell 3000 or the Dow Jones. Everybody has heard of these in some way, shape, or form. These are just market indexes, and index funds track certain market indexes. Now think of market index fund, think of index funds as one-stop shopping. So like if you go to Walmart and you can buy so many things at Walmart, you can buy tires and, you know, kitty litter and milk and clothing. That is what index funds are. You can have access to tech companies, shipping companies, space companies, consumer companies, all types of companies in one place, and those are really beginner friendly as well. And I have some examples of some really good beginner friendly index funds right here, and that's VII, VOO, and SPY. Those are the tickers. Moving on. Now, let's talk about growth stocks and long-term stocks. Now, growth stock companies are just companies who in the near future are expected to grow at a faster rate than the overall market. So these companies usually kind of shoot up a little quicker. And some examples of these companies are Tesla. Tesla has a bright future ahead of them. Same with Amazon. Amazon's big now. I think Amazon will be bigger in the future. Same with Apple. Lots of products, lots of services, and they have a lot of room to run in the future as well. They are continuing to grow. Now let's talk about long-term companies. Long-term stocks are basically companies that will be around in 5, 10, even 20 years and usually grow at the normal market rate. So they won't shoot up fast, but they just slowly, gradually increase over the years. But these companies are really safe and conservative. They don't really, flush or tank with the market. Even if they dip a little bit, they don't just fall. And long-term stocks are really great for beginner investors. And some examples are Microsoft, Walmart, and Kroger. Now, let's talk about 4 long-term stocks that are beginner friendly, and I'll give you 1 growth stock. So that'll be 5 total. Microsoft, ticker symbol MSFT, great balance sheet, great management. You heard of Bill Gates. He was one of the founders of Microsoft, and everybody has used Microsoft in some way, shape, or form. They really aren't going anywhere. Johnson & Johnson was an extreme successful company during this pandemic, and nobody has, not has used their products. Like if you look in your closet or your medicine cabinet, you probably have some type of Johnson & Johnson made product in there. They're in hospitals, homes, offices, just everywhere. Great balance sheet. Starbucks, ticker symbol SBUX, growing company, expanding around the world, loyal fan base, and great earnings report. So again, Starbucks is another good company. And last but certainly not least, Walmart, ticker symbol WMT, superstore, one-stop shopping. Again, made a lot of money during the pandemic because people just wanted to go to one place to access everything that they needed. Again, one-stop shopping was very profitable to them. Great margin, cash on hand, and good management. And that's what you want to look for when you're looking for companies to invest in that are really beginner friendly. These companies won't just shoot up or shoot down. They're not volatile at all, and volatility in the market means when a company shoots up so fast or drops so fast, and all these companies do not do that. They're very safe but good companies over the long term. And then this one growth stock I have here is, of course, the OG Apple, ticker symbol AAPL. Lots and lots of room for growth. I mean, a genius of a CEO. Great future. So many products that people use. Every time Apple is about to come out with something, it gets scooped up so quick. These guys have like $1 billion in cash. Think about this. $1 billion minimum in cash. Apple is like one of the best well-run companies in existence. Great company if you want to invest in as a beginner. Now, let's talk about the fact that you don't have to stop there. These are just 5 companies, but you can look up so many other companies. I think Target is a good one. Dollar Tree is a good one. Kroger is a good one. You don't have to stop at those companies. Make a list. If you come across some companies, even places you shop at that you are customers of, those are great starting points for investing if you're a beginner. Make a list and do your own research, which I do talk about here on this slide is making the time to check in. When you write down your things or you invest, it's really important to do these 3 things. Number 1, it's really important to find someone to keep you motivated and accountable. YouTube is a great resource because there's a lot of people on here that you can become friends with and that will help you be motivated and stay accountable. They will always check in and follow up because they're rooting for you, and so you always want to find someone like that. I'm more than happy to be that for you because I love having interaction with you guys in terms of, staying the course and creating something that, at least in my family, has never been created, and that's financial freedom. Not even so much wealthiness, just financial freedom. The next thing is figure out the total amount of shares you would like to buy and then work on buying them. You don't have to buy 10 shares of Apple at once. Start with a half a share or 1 share and then work your way up. And then next, stay connected to your investments. Don't just invest and then forget about it and then say, oops, 5 months later, oh, I forgot. You don't want to do that. You want to stay connected to your plan so that you don't forget, that you can check in and see if you need to make any adjustments or changes. And one great way to do that is just to pick a day of the month. You don't have to do it every week if you don't want to. I do it every week, but you don't have to. Just pick a day of the month where you say, okay, this is the day where we're going to check in with our investments, see how they're doing, so on and so forth. But yes, stay connected, guys. Do your research and check in because this is your money at work. Now, I do want to put some caution up here. Don't get FOMO. FOMO is an investing term that means fear of missing out. A lot of people fall prey to FOMO in a lot of areas, but especially in investing. If you see a price that a particular stock is, so for example, Apple is at $150, let's say, per share, and you say, I don't want to pay $150 per share, I want to pay $145 per share. Wait until it dips to that price. Remember, guys, market will always correct. Yesterday, Wednesday, January 27th, market was down like 600 points. So again, that would have been a great day to buy. Remember, when the market is red, that is when you buy. I love what Warren Buffett says. You be fearful when others are greedy, and you be greedy when others are fearful. When the market is tanking and is red, that is fear in the market. But people like Warren Buffett or Charlie Munger and different billionaires and millionaires, guess what they're doing? They're placing calls to their fund managers to say buy, 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 because those stocks or whatever it is that they're investing in is at a discount. So remember, guys, the market will always pull back. You can always buy then. I don't want you guys to pay overpriced for anything. So if you guys made it this far in the video, I really hope that you enjoyed this just quick, guide to some stocks that are really beginner friendly. If you have any questions, just drop them in the comment box below. I'll make sure I get back to them, and also leave me a comment. Are any of these stocks interesting to you? Have you heard of any of these stocks? I think you probably have, but you'd be surprised. Again, leave a comment down below. I love talking with you guys. Don't forget to like the video if you haven't already, and subscribe to the channel. I'm really open and transparent and friendly around here, and I really hope you guys enjoy the video. So until next time, I'll see you guys in the next one. Bye bye and have a good one.